Hi, I'm here with Dr. Steve Garth, who is the independent member of our investor committee. Hi, Steve.
Hi, Nigel.
Great to have you back. For all our clients out there, today's going to be a great session. We've got great feedback that you love these sessions, and today even more so because of what's going on in the world. So really good to have Steve. He's going to explain it all, what's been going on in the world, and talk about what's going on in world markets.
Yeah, thanks, Nigel. Well, why don't we kick off and just talk about Australia? I'm going to give both what's happened in the quarter and also just over the year to date from the 1st of January, because that's when it's really all started. First of all, it might surprise people to know that the quarter is actually positive, only by a tiny bit. It's up by 0.4%. But it is obviously down for the whole year. It's down for 9.8% for the whole year. Now, the reason why it's up in the quarter, Nigel, is from about June, the market had something that's called a bear rally, which means in the midst of the market going down, suddenly everyone goes, actually, it's all going to be okay. And the market went up quite substantially, both in Australia and around the world from June until about the end of August. And at the end of August, Jay Powell, the chairman of the Federal Reserve, said, wait a minute, we're going to keep raising rates until we kill inflation. And so the market finally took the hint. And at that point, the market came down. Why don't we just quickly look at the international markets? Look at this chart. You can see Australia's down, as I said, by near 10% year to date. But the developed markets are down even more, by about 15%. And the emerging markets, even more so.
Yeah, so in the Australian market, interestingly, hasn't been down quite as much. I mean, if we look over 10 years, they're all quite similar, but in the last year, is there a reason for that?
Interesting thing, the reason why the developed markets you see there have done worse than Australia is because 65% of developed markets are in the US, and the US has fallen the most. You can see some figures I've got there, the S&P 500 down by 20%. The NASDAQ, that's where the big tech stocks reside, they're down by 30%. That's a serious bear market.
Yeah.
Now again, they were the ones who were up the most in the last 10 years, so no surprise. And the reason the emerging markets are not doing so well is about 30% of emerging markets is represented by China, and China's been in an economic slowdown for more than a year.
It's hard for investors to sit there and say, well, this all seems a bit scary, do I stay with this or not? But are there any, I suppose, there are a few key things to think about for people who've got existing portfolios, or perhaps people who've just got new money and about to invest, and how they should approach that?
Yeah, look, first of all, Nigel, a low-cost diversified approach is always the right way. The other thing is, when you speak to your financial advisor and you go into a portfolio, don't fiddle with it, don't touch it. There's no way you can time when to get in or when to get out. It's a great way to destroy wealth, is trying to time markets. When you look at this last chart we've got here, Nigel, it shows the long run of markets around the world. And it's bookmarked by a whole lot of different events where the market's gone down, and it's caused enormous unease for investors. But the markets recover. The markets tend to go up over time. And once again, this is just a normal correction that we're seeing at the moment. Unpleasant, but normal. Yes, we don't know exactly when it will end, whether it will keep going down, or whether tomorrow it starts going up and it's all over. But what we do know is by staying disciplined, staying in the portfolio that's been set for you by your advisor will get you to the end.
Yeah. Well, thanks so much, Steve. Again, I'm pretty sure this has been hugely beneficial to everyone listening in. Again, we get great feedback on these videos. Appreciate your time today, appreciate your insights. That really helps us and the team obviously make sure that we're doing things as best we possibly can in terms of managing money for our clients.
Terrific, Nigel. Thank you.